Good afternoon, guys. Sanbonani, Dumelang, Absheni, Goeiedag, and good afternoon. I'm back again with one more video. I know I've been absent for quite a while. Just been busy with a couple of stuff in terms of semi-grading, moving, changing location, and just sort of getting acquainted to the new area that I'm currently staying at now. So obviously, I didn't had much time with in terms of producing more videos and posting and things like that. But it's something that I'm aiming to sort of fix as time goes on and start posting more regularly and more frequently. So basically this video I just wanted to chat through some stock picks. As the year obviously draws to a close, we've already pretty much wrapped up the third quarter of the year. So basically 3 months to go: October, November, December. So it's basically like the final stretch. So in terms of the final stretch is concerned, just wanted to discuss a couple of stock picks. I'll just mention 10 companies that sort of interest me right now that you could look to adding to your portfolio just to finish the year off on a high. These are in no particular order. So I'm just going to chat through some of them. Chat through the 10 and basically brief summary of why I like them and why I think that personally they are a good bet. Basically my stock picks. Actually, you could have obviously just do your own research, but in terms of me making this video and what I like personally, these are basically the 10 that pique my interest. So first is Kumba Iron Ore. So Kumba Iron Ore, as we all know, is a subsidiary of the Anglo American PLC group. And the company has got a market cap of about 146 billion. So they've got quite a nice chunky balance sheet there. Concerned with mining iron ore, which is obviously an input, heavy input, which is used within the construction sector. And as we all know, China being the sort of the largest world consumer of iron ore, based on their infrastructure projects that they constantly keep rolling out within the country there, especially after such a dire time that we have experienced through COVID. Definitely that economy is going to look to boosting its GDP numbers, and they basically want to do that through massive infrastructure projects, and the inputs there being iron ore could bump up the actual iron ore price, and the stockpiles that are there sitting with Kumba currently right now could prove to be quite profitable and reward shareholders quite handsomely. So it's obviously a well-run business. They are within a nice quality group of companies, and also with obviously the backing of the parent company there being Anglo American. I think personally it's quite a good bet, and it's one to sort of look out for, and one that I would definitely seek to add to my portfolio. And then next is Discovery. Just chat through Discovery. So Discovery's got a market cap of around 92 billion rands. They've got Discovery Health, they've got Discovery Invest, they have got the Discovery Bank, and they've got Discovery Insure. So it's a well-diversified business, which loses a lot of expertise and data analysis to sort of attract customers towards that business, in as far as behavior is concerned, how they treat their health, getting those health benefits. They've got the Vitality product there in there. All these are basically a calling card for consumers, and we've seen that the bank has grown quite nicely, and the company has posted a nice profitability there, as well as declared a dividend since the outbreak of the global pandemic. So this is obviously another one to watch in terms of the product offering that are gonna start filtering through from that particular Discovery Bank business, which is obviously, as we know, a fully digitized bank, which does not obviously have the overheads which seem to burden your traditional banks. So I think Discovery, a nice, well diversified business, and obviously, in as far as growth is concerned, we've seen that share price quite moving quite nicely. So it's another one that we could sort of add to the portfolio, and obviously also the management team, business being run by obviously the founding CEO being Adrian Gore, who understands the business end to end. I definitely think that you definitely would not go wrong there. Okay, next would be Clicks. Clicks with a market cap of 62 billion rands. Obviously, also another business which is sort of a pharmaceutical retailer. That's the way I would sort of describe them. And that share price has obviously also been on the up and up. All in all, nice, well, safe run business. Nice customer base, growing market share. It's obviously another one to sort of add to the portfolio. Pepco is another one, market cap of 63 billion rands. Obviously operating in the clothing space, focusing mainly on the lower LSM market segment, and obviously with the perpetual payment of social grants and things like that, we could see that business still remaining quite resilient. Obviously, even within the upper LSM groups, sort of your lower middle class, those people are sort of gonna be start filtering through and sort of purchasing those products there, as we've seen that the economy has been quite depressed, and people might seek to sort of lower their basic costs of living. And in as far as clothing and things like that is concerned, we might see those customers start filtering through, moving away from the likes of TFG and moving towards the likes of Pepco. So that's obviously the investment thesis there. Then next is MTN. It's quite a big one, 212 billion rands market cap. Not really much to say there, except for it's a very, very well run business. They've seemed to be able to get over the hurdles that they'd experienced in Nigeria with the SIM cards. They have also divested from markets or economies which have been hit by sanctions and things of that nature. So you wouldn't have an issue of MTN struggling to recoup money back into their bank accounts in order to finance capital expenditure, as well as rewarding shareholders for holding their stock. Okay, next would be Capitec, market cap 200 billion. Obviously, it's a bank. Traditionally, there used to be four big banks in South Africa, and in terms of market cap, Capitec has basically replaced Nedbank in as far as market cap is concerned. So it's basically the fourth largest bank in the country currently right now by market cap. I stand corrected there, but I definitely do know that they are now in the top four. So it is a growing business ever since its founding by Michael Leroux, as you all know, is one of the members of the so-called Stellenbosch Mafia, as well as the backing of the PSG group, Yanni Mouton. They've been able to create a very, very sizable business, eating away at market share and growing quite sizably, all the while growing investor confidence as well as investor returns. So yeah, that's also another good one there that you could look to add to your portfolio. Then we've got Edvitech private education. That's always a big win, benefiting obviously from the deteriorating public education space, with the South African government obviously struggling there. The business has a market cap of 12 billion, so it's one of the smaller ones that I've picked in the list. Obviously, they operate the group, well, the famous brands such as your Abbott College, your Trinity House, your Michael House, as well as your well-renowned Crawford College as well. So definitely a must-buy there. In terms of enrollment is good. Parents paying school fees, so there's a nice annuity income that's flowing through into the business over there. And then, in as far as capital expenditure is concerned, obviously the business is not too debt ridden, unlike the competitor, which is Curo, which I've not actually picked as one of my stock picks. So Advitech is quite a profitable business, posted a nice profit there, and also is paying dividends. Next would be ShopRite. Wow, what can I say? ShopRite, 142 billion. Peter Engelbrecht there doing his thing. They've got the ShopRite X, which is almost like their research and development division there within the business. They've brought us things like the ShopRite 6060, which has increased the number of customers there. Business has been that segment of the business has been generating a lot of income for the group in its entirety, and currently now we are starting to see them with their loyalty card going onto a more subscription based model that is obviously gonna lock in customers then as far as subscription monthly payments are concerned. There are obviously added benefits to joining the subscription model for you as the customer. And yeah, for the business, obviously, I think in most part it's a win-win. It's going to be a nice annuity income for the business there. So yeah, the business just keeps growing. Next is Mr. Price, again, another clothing retailer, which is a little bit more diversified than just purely clothing. Obviously, you know that they have the Mr. Price Home brand as well as Mr. Price Sport, which is also clothing but more on the active athleticism side of things. As the country opens up, coming through from the previous slums of the global pandemic, people wanting to go out, have a good exercise. This particular brand offers that, but at a cheaper rate. So that's another one to sort of go for, especially within the South African context where the consumer seems to be quite depressed. Okay, cool. Next, Cecil. So Cecil, last but not least, Cecil. This is my personal favorite. Had quite a rough patch with the Louisiana deal. They've since sold off parts of that business over there, trimmed and streamlined the business. It is no longer hemorrhaging cash, and through the leadership of Fleetwood Grobler, who's the CEO, together with his management team, of course, have been able to successfully turn this business around. So, at their lowest lows during the global pandemic in 2020, around March, the share price went as low as 22 Rand a share. And I remember quite vividly that at the time they had a lower market cap than Pick and Pay. And they have since been able to correct that, currently having a market cap of 165 billion rands. Share price is northwards of 260 rands currently. So had you picked it up at 22 rands a share, you would have made an absolute killing on the stock. We're seeing the oil price going higher and higher. So if you want, you could possibly see yourself getting into this one. Each time there is an announcement of a petrol price increase, you as a shareholder of this particular business would be obviously benefiting from those increased prices in petroleum as well as crude oil prices as well. The business is paying down its debts and also is currently quite profitable right now, and he's been declaring dividends. Most recently, they've just declared a dividend of 10 Rand per share. So, this is obviously a nice one to hold in as far as capital gains is concerned, as well as in as far as dividend income is concerned. So, big punt on this one. I love it as well. I do hold it in my portfolio too. So, yeah, Cecil. So those are the 10. Kumba Iron Ore, Sasol, Mr. Price, ShopRite, Advitech, Capitech, MTN, Clicks, Pepco, as well as Discovery. So those are my 10. Yeah, cool. Adios. It was a quick one. And yeah, thanks for watching, and we'll see you again in the next one. Cheers.